Hey, you guys, Jim Savoldi, developer of the behavioral analysis and markets model. It's about 10:20 on the 7th of June. So real quick, I wanted to point out several things. We're going to review two, three, four charts here. So this is a 5-minute chart of AMC. And the main takeaway on this chart, to my eye, is that when we had this re-entry here above this yellow line, so remember, when I first engaged with everyone on Twitter publicly, and I first shared the 60-minute chart with the expanding megaphone melt up fractal. It had this yellow line on it. This is the megaphone. This 5-minute fractal doesn't have the expansion of the megaphone isn't real broad. It's fairly narrow. But as far as price action, it all works the same. And so typically when you move up into re-enter the megaphone, you'll race up to the speed line. And you see here where it came up short. Really, that move should have been more like call it a $77 move. Now, it did hit 77 after hours, but still, typically, apples to apples, you want to always look at your speed lines on your day chart and then your speed line on your overnight chart, and not cheat on either one of them. So it's really odd to stop short. If you go back and look at that date, June the 2nd, we all know now what was going on, who was selling during a couple of different dates along this top. And again, that's unnatural. So the reason I bring that up is just the fact that there was selling there's nothing unnatural about that. The fact that it wasn't allowed to move up to where it normally would, based on everything I've studied in tons and tons of examples at every different fractal level going back to 1922. This is almost as if this was pre-planned, or someone had told whoever it was selling in here that this is sort of where they wanted them to put the brakes on this advance. It started to take on that parabolic look to it. So anyway, for what it's worth, that's a little bit odd to my eye. Now, if we move forward, usually these are one and done. Usually you get your reentry, you get a powerful move to the speed line, and that's it. You don't usually reenter, move down, reenter again, and race up to the speed line. That'd be really unusual. But because the human emotion was squelched here in an unnatural way, I wouldn't rule out any move up to the speed line moving forward. So we'll track multiple speed lines just on this 5-minute model. I've extended this to the end of the week. So if we take a look at the close on Friday, this is basically your upside. This is all there is to it. If we started to re-enter, meaning a move above the yellow line, and if we wanted to take a look at where, if we wanted to take a look at where I've got some microphone in front of me. It's hard to do things. Where the recent high is, it's typically an even more dynamic move if you can break back above I'll just call it this yellow line to move us back up into the expanding fractal, expanding megaphone. It's usually more powerful when you can break a previous high and that powerful re-entry simultaneously. That's what happened if you flip this entire setup upside down. That's what happened in 1987 or the stock market crash. You had a break of some previous lows that probably had a bunch of stops, or at the very least psychological levels. And at the same time, we broke below what would be the equivalent of a downtrend yellow line and re-entered an expanding megaphone to the downside with a really steep speed line going down this way under the market. And then in 87, we crashed down and hit it. So that's interesting to my eye. The fact that we never moved up and made contact, that falls in line with the pay me now or pay me later thing that you guys hear me say sometimes. And that really does work really well. I don't know why, but it's almost like if you want to manipulate a market or do something phony to a market, you can get away with it in the moment, but you pay for it down the road. And sometimes you pay more dearly. What I mean by that is, look at where the speed line was if it just would have been able to play out that day. And now look at where the speed line is. So when you choose the pay me later version, or that choice, it usually is a little bit more painful for whoever it is that did this. So if we were to go to the very end of the week on a speed line attack, I mean, obviously, if it's tomorrow, and again, these are very low odds as far as a second reentry like this in a melt up, but I'm just going to lay things out for you guys just in case so that you have some general ideas about upside just purely based on my work. This has nothing to do with anybody else's more extreme upside readings. But if it were to happen tomorrow, you're up into the 145 range. The following day, sort of say 163-ish. The following day, 177. And then by the time you get to Friday, you're sort of at 195, something like that. So that's the 5-minute fractal. Let's take a look at this 60-minute. This is a 60-minute that I have been showing people for multiple weeks before we even started to re-enter. So this is obviously a much more dynamic, expanding megaphone pattern than that 5 minutes. So this is a 60-minute. These are an hourly 1-hour bar. Each of these bars of trading activity contain 1 hour price movement up and down. So obviously here's the window. We started to melt up. There's where on the 5-minute chart, the price was stopped just before we sort of entered this most dynamic part of this window. This particular zone of strength, or ZOS, as I write all the time, shorthand, is extends into the 10th. It was in the 9th. Based on some new data in my 5-minute model, I'm going to extend that one more day. So in my mind, this is sort of an opportunity window here. That's what I refer to these as opportunity windows. And it doesn't mean that you're going to melt up. It just means that if price starts to move above that high, that, based on past history, it's not unusual to have a runaway move. Now, if we were to have a runaway move, I've adjusted this date from the 9th to the 10th, and you notice I've adjusted this slightly because now we've moved out to where it's 290 to 300 as opposed to 285 to 290, which is what this said 2 weeks ago when I created this, or 3 weeks ago. So that's your 60-minute. We've got, hang on a second here. Here's another 60-minute chart, hourly chart. If you guys were with me over the past multiple weeks, I bought down around this level here. So May the 4th, in anticipation of a move up to retest 32. So, I like to take these things one step at a time. When I was buying here, I wasn't talking about an attack of the speed line. I was looking at the 32 retest. And then I was saying, if we do retest 32, we would be moving back above this yellow line. So in other words, if you attack 32 retest, and in my work, retest levels have to be retested as a rule. They don't have to be retested into a specific zone of strength that I'm flagging short term. But if not here, then in some other future zone of strength, I'd be looking for contact at 32. So that's how that works. I knew, though, that if we moved into this zone of strength and attack 32, that obviously it would bring price inside this expanding megaphone, and then we could be off to the races and melt up. So again, I've adjusted this 290 to 300, stretch this date out to the 10th instead of the 9th. This is the other big date. There's something in between here that I may start talking more about. If this week turns into a non-event, then you'll see me start to talk about the 18th through I think it's the 28th. So I might as well put that on there right now. It'll look something like that. And again, I put these up there just in case there's an attack of the speed line, so people know what the potential upside is. I'll always do something sort of like this as well. And then I'll stick the dates in there. And I'll end with this one. I don't want to throw cold water on anybody's optimism here, but this is a chart I haven't shared for probably 3 weeks. And the only purpose in creating this chart is just to give people some kind of an idea about what it would look like if this stock were to trade to 100,000, which is, a number that's thrown out around there. Based on everything I've ever seen or think I have understood, that doesn't make any sense to me whatsoever. What I decided to do, just so that people could get an idea about, how extreme this number is that they're talking about, I left the speed line in place, the speed line that we were talking about attacking, and then I had to move the chart to a minus 15,000 on the downside just so that we could bring the speed line up. Otherwise, it was pancake down here. So here we are, and this is what some people are talking about. So again, it's the price can go wherever the price wants to go. My speed line is definitely not the limit, but I just think you're sort of setting yourself up for pretty certain disappointment if you guys are talking about this type of a number. I'd tend to bring that down a little bit and just be really happy, irrespective of where it ends up moving. Anyway, that's it. Good luck to everybody. And if you have become a subscriber to the behavioral analysis, either single market, which with AMC, we've included that Bitcoin access just because so many people, like Bitcoin and to track Bitcoin. And I happen to think that we're in for a dynamic move to the downside here over the next during this week here in Bitcoin. So anyway, I want people to be able to track that. It isn't unusual to see collateral damage sometimes when you have a big move in an unrelated market and there's a margin call across the board. Sometimes you'll get a squeeze in short stocks because they have to go and raise capital someplace, or vice versa. They get a squeeze and they have to go do something else in an unrelated market. I've talked about this before. You can even get spillover from commodities into the stock market, or the stock market into commodities. It's it just depends on what the person is holding in their portfolio when that margin call comes. And if they can't go and raise capital quickly in the stock or commodity that they're trapped in, if it's thin, then they have to go raise the capital someplace else. And so you get these sort of dislocation moves. That's something else that I have on your radar screen for this week. If you're paying attention to crude oil, crypto, or AMC and some of the other stocks that have a high short interest. All right, good luck, you guys.